So hi everyone, it's Wisdom Jordan right back here, and in this lesson we are continuing with our series about chart patterns, and in this video we are going to be looking at the ascending channel. So the ascending channel looks exactly what you're seeing on a screen right here. It is signified by two trend lines, the upper trend line, which is considered to be a resistance, and then a lower trend line, which is considered to be a support level. So the price comes bouncing off this upper resistance and then bounces off the support, bounces off the resistance, and then bounces off the support until it breaks through this either the resistance. It can break through the resistance and then continue the uptrend, or it can come and break through the lower support level and then come to retest some time, and then it makes a downtrend. Okay. So the ascending channel is a chart pattern formed from two upward trend lines, and they are drawn below and above the price. They represent a support and resistance level, like we have just explained. So the ascending channel pattern is also known as a rising channel, or sometimes it is called a channel up. It is a bullish chart pattern, which shows that it is majorly considered to be a bullish pattern, that the price is expected to break above the upper resistance and then it continues within the uptrend. Or it is also considered a bullish chart pattern because its major trading format is for bounce off of the support and then sometimes to see the reversals from the resistance. So when in a channel, prices are expected to bounce off the lower and the upper boundaries, and that's support and resistance, and then much more reversals occur, and then the more reliable the pattern becomes. So what we are saying is that the much more the price comes on bouncing from these levels, that is when the price becomes more reliable. So for example, if you have your channel formed and then the price comes, bounces off this upper resistance, then bounces off support, resistance, and then off resistance, then off support. So the more this thing occurs, this bounce pattern, that is when the pattern becomes stronger. So just like in support and resistance, the more the price tests a support level, the stronger the support level becomes. It is the same thing right here. So when the price tests the resistances or these channels very many times, that is when the channel becomes a stronger and more reliable pattern. Okay. So the ascending channel looks similar to a rectangle pattern, but the difference is that the ascending channel slopes upwards. So we are saying here that in a rectangle we have whereby the price gets locked into into horizontal lines. That's support and resistance. Okay, but then on the other hand here we get these slanting support and resistance levels lines. So the ascending channel is exact opposite of the ascending channel. And then another way to trade this pattern is to wait for the price to break through either the trend line, either of the trend lines. It can break above the resistance or below the support. A breakout above the upper trend line generates a stronger buy signal, while a break down below the lower trend line generates a stronger sell signal. So you also have to keep in mind that just like all other patterns, channels might be prone to false or premature breakouts, whereby the price may retreat and then go back into the channel. So when the price fails to reach the upper line, it signifies that a trend is in exhaustion. So when you have your two trend lines, this is the lower one is support, upper one is resistance. So when the price comes, tests the resistance, then goes down to the support, resistance, then support. So if price comes and then it fails to reach, so for example, right, it fails to reach this resistance, it shows that the bulls have failed to push the price higher than it has been pushed on the previous level. So that shows that the trend or the power of the bulls is reducing because they have failed to push the price higher than this previous level. So you remember in a bullish trend, we expect that these bulls keep on, they make retracements, they accept the bears to make retracements, but when they come to push the price, it is higher than this previous level. Okay, so for example, you can see that this one is is lower than this high. So we expect higher highs, higher highs. So when here you see that the high that has been formed is lower than the previous high, it shows that the trend is going to exhaust. Okay, so if especially now right here, you can see that it can come and shows that it is exhausting and then pulls so far higher than, and then it breaks this resistance, or sometimes it can come and fail and then it breaks the lower support level. Okay, so the direction of the break is what determines either as a continuation or a reversal pattern. So you can see that if you have channel right here and then the price is locked within the channel, so we expect two things. One, the price can break above this upper level of resistance and then it continues into its uptrend, or sometimes it can fail to break above and then breaks the support level to create a downtrend. So what happens is that when the price breaks the upper resistance, it creates a strong buy signal, and when it breaks below the support, it creates a strong sell signal. So when the price breaks above in this uptrend, it breaks above the resistance, this one becomes a continuation signal, and when it breaks below the support level, it becomes a reversal signal, because we are reversing from this uptrend into a downtrend. So this is how the ascending channel looks like. In X explanation is that we have a series of higher highs. So the price keeps on increasing because we are creating higher highs and then higher lows. But then we say that if the price comes and, for example, right here, it falls to, so for example, right here, if it comes and then reverses from here and then goes back to test the support, it shows that this previous high is higher than this high which has been created here, and then it shows that the bulls have failed to push the price to break above this previous high, just like it has been done here, that this high is behind and then this high is in the upfront. So it shows that the bulls are falling in energy, and therefore we are going to get a reversal. But it can happen like this and still the price goes high, or still here the price can break this support level. We trade this by making buys on this level of support, and we also make sells on the level of resistance. So because it is an uptrend, so if you make a sell order, it means that you are against the trend, and that is what we call the counter trend trade. Okay, counter trend trade. You trade against the trend. Okay, so that is what happens. So in the way to trade, number one is to make buys on this level of support every time the price hits the support, and to also make short signals every time the price hits this upper resistance level. But for you to do that, you have to be patient until this channel has been, we have tested 3 times. So but this is now the problem. When it tests 3 times, you can come and then make your sell order here, and then the price keeps going high. So we shall see how to avoid that. Okay, so on a candlestick chart, this is how this ascending channel looks like. So you can see that here the price was trying to come from a downtrend, and then here we got this channel. Okay, it has tested 1 and then 2 and then 3 times, so that one becomes a valid channel. So every time the tests are 3 and above, it becomes a strong or a valid channel. So here we are waiting for a break, and a break can occur in an uptrend, or it can occur in a downtrend. So when the price breaks above this resistance level, we get a continuation signal. But if the price breaks through this support level, we get what we call a reversal signal. So for us to make a trade on a break, we wait for a candle that closes entirely above, this resistance line, or we wait for a candle that closes entirely below this support level to make a short order. So in this case, you can see that the price closed below this level here. Okay, it closed below the support level, which shows that we are going to get a reversal. So what happens is that if you have your channels like this, when the price breaks below the support, it will try to make a retest, and then it continues. Or sometimes if it breaks above the resistance, to make a retest and then it continues. So sometimes retests occur, and then another times retests don't occur. So you can see that right here after the break, there was a retest. So our entry point would have been here with a stop loss, and then we'll be able to catch the wave down. So another way to trade was to wait, and then we trade off these bounces, but we have to wait for the bounces to become 3, to make 3 count. So if here we got a candlestick pattern, we would have made a trade to go up. But still, if you are experienced trader, you wouldn't love to wait for this because you would be missing out all these profits. So you could see that right here we have a bullish engulfing, and on this bullish engulfing, you could have made a counter trade, because here we were sloping. It shows that we are in a short-term downtrend, so we could have made a counter trend to catch a retracement before the price would think of falling down again. So you can see that right here we have a doji, okay, and which shows indecision, and then we have the price has been pulling back. So if we put a Fibonacci level, you'll find that this is a Fibonacci retracement level. So what we do here is that we put a sell order right here to wait to catch this trend line down. So that's why the problem is, if you are not experienced trader, you wouldn't be able to spot all these things. So what you do is to wait for the retest. So when you get 3 tests and then we test this upper level, it means that this is a confirmed level of resistance, and this is a confirmed level of support. So every time the price hits a confirmed level of support, it tends to bounce off, and if it hits a confirmed level of resistance, it tends to bounce off. So if you didn't watch my videos about support and resistance, I recommend you go back, because I might not be able to explain everything about support and resistance in this video, which is about channels. So when you get your channel, there are different ways to trade. Number one is to wait for the price to make these 3 tests to confirm the support and resistance levels, and then we trade bouncing off this support and resistance. So if you're going to make an entry trade, you wait for the price to come and then hit the support level, for example, then you wait for a candlestick pattern. So for example, right here you can see that you have a bullish engulfing, and then here there is no candlestick pattern, no trading. Here you have a bullish engulfing, you can trade. Okay, then you can see that right here you have a doji on a retest after the breakout. So you can trade using support and resistance, so you can trade the breakouts, either the breakout strategy or the break and retest strategy. So after this doji, you can see that we got clear bullish candles, and bearish candles. You could be able to make a trade down. So in this chart, you can see that we had a channel right here. You can see the price made a channel. Okay. So how would we trade this? We would wait and then count this one as a first test, this is a second test. So this is where we would have started from. So 1, 2, and then 3. This is 1, then 2, and then this is 3. So you can see that here we have a bullish, big bullish candle, which is preceding a doji. Okay. So right here you see we have a bullish candle. Right here you have this big bullish candle which is preceding 2 dojis. So you would have put your buy stop order here, and then your target price would be on this upper trend line, but it did not reach very well, though later on it came. So you can see that right here you would have made a trade, but the price has already gone. So the risk to reward ratio is not coming out. So right here would have made this trade, and then even here would have made this trade, but the problem is this candle sold too much. So you could have maybe entered from here, and then you catch the wave down here. So here you can see that a trend, we got a break in the opposite direction, and that was a reversal. So we would have made our short trade here, okay, then catch the wave down. Why are we making our short trade from here? Is because this is the candle which closes entirely below the support level. So we wait for a candle that closes entirely below the support level. That's the candle that we use to make a short trade. So in recap, if you have a channel like this, so you wait for the price to create strong support and resistance levels. After that, we start to trade the bounce off of support. So for example, you make a buy, then exit at a level of resistance, then here you make a sell, and then you exit at a level of support, then still you buy, and then exit at a level of resistance, then you make a short trade to exit at a level of support. So if you don't do that, what you do is you wait for a break. So if the price breaks below the support level, you can wait for a retest. So if you don't wait for a retest and then you use the breakout strategy, you wait for a candle that closes entirely below this support level, and then you put your sell stop order, or you wait for a retest. After a retest, you get a candlestick pattern, and then you make a sell stop order. So if the price breaks above this upper level of resistance, what you do is you wait for either a retest, or sometimes you don't wait, and then you make a continuation trade. Okay. So here I made this screen to show you that when the price can move through different level of channels. One, the steepness is what changes. So you can find that one is at almost a 90 degrees. Okay. So these channels normally they provide what we call the reversal signals because they are overextended. So the price is overextended and is not stable because it is moving higher rapidly. But then there is another channel which would move at a different steeper level. Okay. So this one will provide either signals, it can provide a continuation, or it can provide a break. So you can see that this one is not so steep compared to the previous one that we have been seeing. So here you can see that the price is more stable and is in a clear uptrend very stably. And you can see that here after the break right here, the breakout, this candle which closed entirely above this resistance level, the price tended to shoot higher still. Okay. So when a channel is not so steep, okay, it shows that there is stability in the occurring trend. And when the channel is very steep, it shows that there is volatility within that current trend. So you have to expect a quick reversal from this one. And therefore here you can expect both either a reversal or sometimes a continuation. So here we got a continuation, though it was there was a lot of rejection, which shows that there's going to be a break. So after this rejection, we expect a breakout below this support. So you can see that right here you get a break, then you get this short-term retest. Okay, so right here there is a break on this blue candle which closed entirely above below the support, and then there was a retest followed by this doji. So you would have made your short trade from here and then put your stop loss, and then you wait to catch the wave down. Okay, so that is how we trade the ascending channel. In recap, just as a reminder, is number one, you wait for the price to create a channel, and a channel will be created using clear support and resistance trend lines. Okay, so the upper one is a resistance, the lower one is a support. So when the price hits these levels 3 times, they become strong. So after they have become strong, we start to trade the reversals. So for example, here you make a short trade, you go and exit it at a support, buy trade, exit at a resistance, short trade, exit at support, buy, exit at resistance. Okay, so when we are doing that, we have to watch out and then be able to spot that we have candlestick patterns. So for example, right here you have a bullish engulfing. You can see that right here you have no candlestick pattern, you don't trade. And then right here you have dojis followed by a big bullish candle, so you make a trade. So you can also still see here that you don't have a candlestick pattern, you don't trade. But then when you look here, you have series of dojis, so you could have made some short trades, though it was not successful. Okay. So from there, you have to wait for another trading strategy. One here is to trade the bounce off of support and resistance, and then number two is to trade the reversal from this ascending channel, whereby the price breaks below this support level and then it reverses into a downtrend. Here we said that we wait for a candle that closes entirely below this support level, and then we put a short trade for a breakout strategy, or we wait for a retest. When you wait for a retest, you wait for the price to test on to retest on this support level, and then you wait for a candlestick pattern, and then you put your short trade, and then you catch the wave down. So if that doesn't happen and the price comes and then it breaks above this resistance, we put our buy stop order and we catch a continuation trade. So when the price breaks above the resistance, there is a strong buy signal, and when the price breaks below the support, there is a strong sell signal. And then the other issue was that if the if the channel is very steep, we expect so much of a reversal, and if the channel is not so steep, it shows that there's stability, and therefore we can get a continuation. But still, now in final, we can see that if you get a channel, most of the times you'll get a reversal because the price has been on an uptrend for a long time. So you can say that here the uptrend has been on a long time. So we expect a big retracement within the market or even an entire change in trade. Okay. So thank you so much for watching this video. Do not forget to subscribe to the channel for support and for more videos like this. My name is Jordan. Bye bye. I'll see you in the next video.